Hey, what's going on, guys? Happy New Year. This is TerrenceRe. Uh, Back at you with another stock market update. And today, the topic of today is Dividend Aristocrats. We're going to talk about some investing, like if you got like long term investing aspirations and you're not just looking to intraday trade. And we're going to talk about maybe creating cash flow with dividends and maybe the best dividends to possibly look at. Then, as you're looking at the screen right now, the S&P 100 is, let's see, we got 57 advancing, 43 declining. So pretty much, I would call that a balanced. We do got one extreme, and that's Tesla. Tesla's been getting killed. If you look, for the most part, I would say that the market is relatively flat. A Tesla is down another 9% today, almost 10%. It's down $12. Currently trading around 111. So we're gonna take a look at that chart in a minute. Let's take a look at the SPX or the S&P 500. Uh, it is down about a quarter of a percent for the most part. You can see that the Russell futures are green. So generally, I like to look when I see the small caps up or whatever direction they're in. That's pretty much how I base the market. I know that seems kind of weird, but that's just the way because they're a little bit more volatile. So once I see them turn green, then I expect the others to turn green. It doesn't always work like that, but I don't see us having a real big move today. If we take a look at the charts, looks like we're in a little bit of a trading range. This little area right here. It's like a little range, this little box for the last what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. So basically the last 2 weeks of the year. So we like in this little box. So for the most part, if I was to move this out some, let's see which way the market goes when it breaks out of this box. And then probably if I went to an intraday level, drop down to like a 1 hour or something, you could see the consolidation a little bit better in here. So we in a little bit of a range. If I had to make a guess, I'm expecting it to break to the downside. I'm betting on that myself. Let's take a look at Tesla. It's down. It's now down 10%. Will it take out? So it closed this little gap, and you see it gapped up. We're looking at, let's see, it gapped up last week, right? And you see I got like a little I highlighted this area for support. So got this low. Will it take out this low and come down here and touch this little fib level or break through it? We'll see. But I don't think anyone's holding Tesla at this point. If you are, I'm not gonna say if it's a good area to buy in or not. I don't know. You know, it's at an area of support or a area of support, but we've seen that before. It could break through. I just don't see at this point. I don't know. You basically trying to pick a bottom in Tesla, catch a falling knife. So it's just one of those things. Like some people are Tesla fanboys or fangirls, and they gonna buy it regardless. I guess you just gotta hold on for the ride. It is extremely oversold. So yeah, you could get just looking at this technically. At some point, you should get a bounce, right? No, the market doesn't just continue to fall straight down, but in this one right here, it is. So with that being said, what I really want to talk about today is dividend aristocrats. So let's first define what a dividend aristocrat is, and then we'll go from there. A dividend aristocrat is a company. Now I'm on Investopedia, so you can just Google or go to Investopedia and put dividend aristocrat in. and it'll give you this. A Dividend Aristocrat is a company in the S&P 500 index that not only consistently pays a dividend to shareholders, but annually increases the size of its payout. So it pays a dividend and it annually increases the size of its payout. By definition, a company will be considered a dividend aristocrat if it raises its dividends consistently for at least the past 25 years, right? So you got companies out there. Now you can get a list of those. You can Google it, and then the list will come up, and the list will be adjusted. It should be adjusted, annually on whatever list or you can TastyWorks. You see me sometimes pull up TastyWorks on here. I do have a link in the description to the TastyWorks platform. I think I got it open. I can pull it up. I'll pull it up before this video is out because I do have a platform open. And they actually have that list on there already. And so some examples of some dividend aristocrats would be AT&T. I think that may be changed though. I think this would have been updated. I think AT&T fell out, but I'm not sure. But I know ExxonMobil, Walgreens, AbbVie, IBM, 3M, Caterpillar. Now, Caterpillar is most of the time you'll always see Caterpillar on my watch list right here. I do think that Caterpillar may be one of those stocks that you might want to keep your eye on this year. You can see it's breaking out. See the high right here, and this is a 3-year chart, and you can see that it's testing those highs right now. So Caterpillar is breaking out to the top. If we break it down to a 1-year chart, it is at a yearly high. So you would be buying the top. Let's look at the weekly. You see, this is a 5-year weekly. So I mean, you're right there up at the top. So, keep that, with a grain of, take that with a grain of salt. But Caterpillar pays a dividend. Let's take a look at it. Has a dividend of $1.20. So it pays $1.20 quarterly, right? So you got a 2% yield. So this is one of those things, and right here is your dividend, your ex-div date. But you can all on Thinkorswim, you can come here to the trade tab and you can look that up. And it's also on TastyWorks as well. TastyWorks even has a list of dividend aristocrats, so you don't even have to look it up and Google it. And you can pull, matter of fact, let me go ahead and pull that up for you guys. Give me just a second, and I will get that up on the screen. Stop that. Let's go to that. Bam, voila. So let's do, I think my face may be hiding some of the screen, so I'm gonna switch that up in just a second. Bam. Now, here we got dividend aristocrats on the watch list. So if you came over here on watch list, dividend aristocrats, boom. You can pull it up over here on the side panel, or you can come in here, click this area right here, and then that'll bring it up right here in the middle. And so here are all your dividend aristocrats. So if we came up here to the top, I don't even know all of these stocks, but they already have the list for you. And so you could come on here if you wanted to. I could let's click on Caterpillar, since that was the first example on Thinkorswim. I could come over here, open this up, come to overview, and you look over here to the right and you see where it says dividend, $1.20. So, and it tells you the market cap, the year, 52-week low, 52-week high, gives you a liquidity level where, if you're trading in something that's liquid or not. So you can you can open up an account with TastyWorks and you'll have this list. This, in my opinion, this isn't a bad list to trade in as well, because for the most part, you can see that it's liquid. Here is ExxonMobil. ExxonMobil pays a 91-cent dividend. You see it has 4-star liquidity. So that means that it's liquid. That means that you can trade in and out with stocks, shares, with options, relatively easy. Excuse me. Let's see. Johnson & Johnson pays $1.13 dividend. Look at your liquidity levels. So with Dividend Aristocrats, if you want to do some long-term investing, these particular companies have been paying their dividends to their shareholders for the last 25 years, and they've been increasing their dividend annually according to what is defined as a Dividend Aristocrat. We got Target, pull up Target, $1.08 dividend. So if you're someone and you have a substantial amount of cash in your brokerage account, and you're just like, hey, you're trying to park it and maybe create a little bit of cash flow, this is the list, in my opinion, that I would come to. I don't know how many stocks is on here. I probably had to count them, but I want to say it looked like an excess of 50. So, and it's updated for you, but you can also Google it and find this list on the online if you don't have access to TastyWorks. So, hey guys, if you got something out of this video, hit the like button, hit the subscribe button, and I'll be back at you with another video tomorrow. We'll go over another update of the market. Um, be safe out there. Be comfortable with your risk. I do not think that the market is done falling. I think it's going to continue to go down for the rest of this year, in my opinion, until it gets to a point to where the Fed decides to stop raising interest rates. And they're probably going to have to, in my opinion. I don't think that they should, but they may have to cut interest rates again and go through that cycle again. But as long as they're raising them, I just expect the market to keep going down. So it will behoove of you to learn how to short. If you don't know how to short stocks, maybe take some short option positions, sell calls against current stock positions. You gotta learn how to get nimble and be quick out there. So with that, guys, I'm gonna be out. Peace.